Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's getting late on a Monday. I've got so much to get through. I've got a huge week ahead. I'm best man in my best mate's wedding, but I did want to punch through all these slides because I've got most of it ready. There's some really interesting stuff going on in the macro world and the crypto world, so I'm going to skip through it even quicker than normal, but I did want to share this with you before I have the rest of the week off. Right, we do welcome 1,000 new subscribers this week. Welcome on your crypto journey. It's a very interesting time to be coming in, whether it's crypto investing or macro investing with the stocks, which we'll get to. And obviously, if you're new to all this, head over to our new platform. We've built this from the ground up to stop our reliance on Facebook, YouTube, Twitter. And this is really becoming, taking on a life of its own. We've got some very interesting corporate partnerships and things on the horizon thanks to Collective Shift and the great work that the team do behind the scenes here. Plenty of that is all free if you head over there and check out the Knowledge Centre for your friends and family that are just getting started investing. Now, a couple of scams to start off. So, look, this is one that's pretty sad because back in the day, ACX were a trusted Australian exchange and Sam Lee was a well-known Australian crypto figure. And I'm not sure what happened, if they got hacked or running insolvent or issues with banks, but this is really left, I'd say more than this, more than a couple hundred without their money or their crypto. And now it's probably, going to go to proceedings. So really sorry to hear about anyone that was affected by that. But I believe that Sam sold it a couple of years ago. So it was no longer Australian owned, I believe. Anyway, something changed along the way from when they were trusted in around 2017. But let's see what happens there. Now, the other one is Coin, which, I've been shouting from rooftops that anything that takes hundreds of thousands of dollars off mum and dad investors and doesn't give them away to sell is a huge red flag. Now, ABC and a lot of others are starting to clue into this. Blockchain Australia kicked them out of the organisation this week, and they turned around and tried to spin the story as if, they'd left Blockchain Australia to sign up to the Enterprise Ethereum Alliance. Now, anyone can join the Enterprise Ethereum Alliance if you pay the $3,000. So, look, where there's smoke, there's fire, and there's more smoke than ever there. So, look, I'm standing by everything I've ever said. There's businesses out there that have got piles of this stuff and no way to sell it. And it's the businesses that are giving each other goods and services for free, while all that money flows up the pyramid to the owners of the business. So let's see what happens, because I'm almost certain that this is going to collapse within 12 months. One thing I do want to give you a bit of a plug. I just uploaded a tutorial, a bit of a walkthrough of that Bamboo app. They're still running that Bitcoin giveaway, guys. So $10 to everyone that signs up if you type in Nugget, and then you get another $10 for all the friends and family you sign up to a max of 10. So yeah, you get $100 for free. That's an awesome little round up dollar cost averaging app that's free to use. Let's get into the local news. So how many times do we keep seeing all these banks in the headlines? ANZ with these indictments being drawn out, this cartel case, all stuff that was touched on in the Royal Commission. We've got Australian lawmaker quits the ruling party. So Scott Morrison no longer has the majority, in case you were wondering if there's even less things going to be done in Australian politics. But Daniel Andrews, he's preparing to rip up this Crown Casino licence. So casinos looking more and more like a money laundering front with a focus on that high roller area. Australia did finally shake hands with Facebook, and they've agreed to these laws. So they're going to pay the big boys. A mate of mine reached out straight away and said, how come Nuggets News isn't getting paid where all these big, the big corporate media, mainstream media are now getting paid? So again, where do you draw the line with all this stuff? I don't think there's a right answer, but they did manage to strike a deal last minute. Interesting chart from the Kook here. This is supply and demand of the house prices. Of houses, and this is going to affect house prices. 300,000 excess capacity. So over the next few years, think about all the things Martin and I talk about. Immigration, all that. So $50 a fortnight is a bit of a heartless portrayal in terms of the raise that job seekers are going to get. When you think about the cost of living, you do feel for these people. Are there jobs out there? I'm not sure. Probably not the right ones, I would say, at least at the moment. Now, Pauline Hanson has stepped up in this, what are they calling it here? Holgate Gate? Ozpost Gate, something like that. Christine Holgate, because she's trodden on the toes of the bankers trying to get Australia Post into banking and finance. And we'll talk about that whole sector a little bit later on. But here we've got more and more of these MPs talking about this. I don't want to get the video censored here. So big allegations being thrown around Australian Parliament this week. The Prime Minister, I don't think he's put out a statement on all this yet, but it's just never a dull moment in Australian politics at the moment. Australia's entered top 10 in global rankings as a soft power, and I almost think it's kind of like our position between China and America has kind of dragged us into this position of power somewhat. Now, we've got these interest rates and bonds, yields rising all around the globe, and it's really put the RBA to the sword here. They've had to act for the first time in a long time. They really haven't had to put the foot to the floor yet, and this week they did. So this was a $3 billion purchase of the 3-year government bonds, because remember, they are targeting that yield curve intervention that other countries haven't even done yet. But the Aussie dollar is getting up and it kissed 80 cents. So remember in the midst of the breakdown in COVID when it hit 55, and we spoke about that capitulation in emotion that can mark bottoms, short or mid-term. Here we are at 80 cents, and I don't think anyone would have predicted that at the time. So global bonds, they're all heading high, these yields. And like we spoke about, I think it was just last week, the magnetic field, it's a black hole where Australia is going to have to do what everyone else does. And so, $3 billion for Australia is a lot. They've got to step up to the plate, basically just buy as many bonds as they have to. When investors are all selling these bonds, interest rates go up as price goes down, and the RBA are there saying, hey, we're going to absorb all that because we have to keep interest rates low because of how big household debt is in Australia. So this was the worst bond bloodbath since 94, and hopefully for a few of you now, you've seen it in our own country, a lot of the Aussies, you're starting to put together these pieces about central bank intervention. So if this hadn't have happened, interest rates would go up. And then, imagine that on home loans, credit cards, car loans. So this is what central banks do. And now in Australia, we don't have a free market and price discovery anymore. And so guess what happens? Risk taking. All that money that flooded out of bonds, it goes into the stock market. So one thing, and a lot of people say, Nugget, you've been calling for a house crash for 4 years. And that's not true at all. I've outlined how the fundamentals aren't good and don't suggest we should be having increasing house prices. But I said all along very clearly, if we go to 0% interest rate policy and start printing money like the US, the exact same thing is going to happen here. The bubble's going to get bigger, stocks are going to go up. It's not rocket science. In fact, I'd say the Australian investment sector is almost a turtle. Like, anyone could have seen this coming, and here we are. We're going down that path. So it's going to be easy days and happy days in a bigger bubble as long as they keep those printers running. Qantas has pushed back these plans for these long-haul flights to October. I don't think they're going to be booking those out anytime soon with all the global lockdowns that are still taking place. Air New Zealand, this is the controversial thing that a lot of you knew was coming. So these digital vaccination passports for flights to Australia. What if they say you can't fly without one of those? What are you going to do? I'm sure plenty of you don't want to have to go down that route. Okay, so we've got more interesting studies coming out about COVID and which ones stop the spread and what don't. More studies about the varying strains that are surging in different areas, and the news isn't good. So looking more and more as we head into that 1 year plus territory now, where we've still got plenty of places in lockdown, new strains. But one thing that's good is that the death rate and hospitalizations, they're the key metrics. They're falling, and that's where we should be focusing our attention and asking for explainers. So here we have no love lost between China and the US once again, and all these hacking tools that are being used against the US. Now, social media, I think, is probably the biggest weapon for both sides, whether it's TikTok or Facebook. That whole dynamic It's changing very quickly, and the blockchain space is going to play a massive role. So dollars are flooding into China at a record pace. We've seen that Australia, China as a more attractive place to go. Their economy is ticking along a lot better than other places. They're using huge amounts of commodities and stockpiling, so no love lost between them. Let's see if they get those agreements back on track. Get rid of the tariffs, and whether or not China actually take as much as they said they were going to last time with all the trade deals. The US Supreme Court is setting the stage for Trump's tax returns to become public, and I'm sure that is not going to be a dull day in the media and the headlines. UK firms are reporting strongest hiring intentions in a year, so possibly some green shoots starting to show up after Brexit. No inflation. We've been told CPI is 0.3%. It's insane to say that it's that price. When look at these food prices, this is from only less than a year ago, April 2020. This food index has gone from 230 to 330. So, we're talking 30% rises in foods in general. Food inflation is the best predictor of bond yields. And you've probably heard me talk about foods and that on the channel in recent months. And here we are with bond yields, sure enough, they are starting to go up. Biden is looking to revise the small business PPP loans to reach much smaller minority firms because they're the ones that were hurting and they didn't want to go into more debt. And I believe they should just get a shot in the arm. They shouldn't have to pay this money back. They can't just go out to the bond market like MicroStrategy can, for example. Apple, they're looking to buy a company here, or they have been, every 3 to 4 weeks. This is another example of the big boy squashing the competition or the little guy. World's largest hedge fund manager is warning about this extreme in tech stocks and this bubble. So 99 all over again. Those SPAC companies, they're giving up some of these giant gains after this recent pact has been confirmed. So all this is just signs that it's kind of coming to an end. There's a bit of a tailing off here. There's been a lot of good money made and a lot of insiders have sold. And as JP Morgan says here, forget Bitcoin and crypto, it's this fintech. Think about like in Australia, Afterpay, ZipPay, like everyone is just obsessed with these little things that I would not say are revolutionary or groundbreaking, but everyone wants to be a payments company. Everyone wants to launch their own rewards or coin in the crypto world, and this is like a shadow banking system that it's growing, and it's fairly highly unregulated compared to other industries or neighboring industries. So I think all this is kind of going to change very, very soon. All right, so US stocks could see 170 billion stimulus boost, says Deutsche Bank. This is whether or not the stimmies all go into these speculative stocks. So 37% of respondents in one survey said that they're looking to put that into equities. I would love to see 37% is it 1.9 trillion? What are we talking there? 600, 700 billion dollars go into crypto from the stimmies. That would be a very, very exciting day when you consider that Elon Musk and Tesla bought 1 billion. US central bank payment system was down for hours. Another reason for blockchain. In Australia, it feels like the ATM network or the FPOS machines go down just about every month and always over Christmas. So we did have the House pass the 1.9 trillion stimulus bill. More to come, possibly. It's Janet Yellen that's been interesting in terms of what she plans on doing with the huge built up money that the government has at the Fed now in their treasury holdings. Biden is looking for this $37 billion boost to the chip manufacturing industry and bringing jobs back home. So we've spoken a lot about how the semiconductors are in thin supply at the moment. Somewhat due to supply chains as well, when you think about the manufacturing and the rare earths required to make them. So the Fed is keeping this easy policy, no mention in sight for even years to come of raising rates, but they're not giving the market more stimulus, which is what they're looking for at the moment. Weed is another sector that's had a bit of a bubble. It's been through that washout stage, and now we're coming through the other end of it where we're seeing some promising companies start to deliver big returns. So hopefully in the next couple of years, we're going to see we fully legalized in every state and being able to grow it, hopefully in Australia as well. I'm all about these psychedelic drugs or drugs found in nature tend to interact with the body in a more harmonious way, would be the way that I describe it. And we won't go into carbon chemistry here, but that's my pharmacist hat on for a split second there. And those drugs have got a lot more to give the medical world and humanity than what we're currently allowing them by imprisoning people that want to experiment with them. Tools for the mind. Okay, so from psychedelics back to central banks. They're fighting that bond route just like I spoke about in Australia, with more action and more promise. So at the moment, they're hoping that they say we're going to fight this, and by saying that they're going to do it, the market starts to front run that. So if they say, hey, we're going to target the 3-year bond like Australia are doing, then Jamie Dimon and all the big banks, they all run out there and start buying 3-year bonds every time they creep over that level, because they know that there's a buyer at that price. They're always going to have at least a better price. So hopefully that starts to make sense. ECB, they're doing it. We're going to boost if needed. So it's all about jawboning, just talking it up, and then letting the market do the rest. So companies are successfully raising prices, but the Fed is just saying that nothing has changed. They're saying, CPI is 0.3%. Don't worry about the fact that your grocery bill has gone up 30% in under a year. Inflation is CPI is 0.3%. So we want to get it to over that 2 or 3% band because we've missed it for so many years. So we're going to continue to pursue this policy until prices go up faster than what they are now. That's basically what they're telling people at the moment. I think it's different this time because central banks are already sort of having to face up to the rising yields. Imagine how big the central bank's balance sheet is going to be when they're already doing $120 billion of QE at the moment. It doesn't even feel like they're doing anything. Imagine if they've got to step up and start doing yield curve control every day as the market starts to dump trillions of dollars of bonds on the market because they can get better yields elsewhere. Are the Fed going to have to buy $10 billion of bonds in under a year? This can get crazy very quickly, and 10 trillion is a realistic number. And you think about the money that's looking for a new home, and you think about the potential market cap for gold and Bitcoin, other cryptos, if 10 trillion wants a new home, very, very promising. We can easily 10x from here in the crypto markets, and gold would, double. We're talking $4,000 or $5,000 gold in under a year if all this plays out. Okay, so US tech stocks rebound as the global bond route eases. So towards the end of the week, things started to normalize a little bit. Now, this was really hurting the tech stocks because tech stocks are all about future earnings, and you can't speculate on the future if money's easy now once interest rates start to rise. It starts to get pretty real, a reality check, a slap in the face for these companies that have got no money and they're burning through huge cash piles and not making profit yet if they're paying 5% on all this money they're borrowing rather than money basically being free, 0%. SEC has suspended 15 stocks that got hyped on social media. I'm not sure they're going to like the crypto world. And I think, isn't Elon Musk being looked into now for his tweets about Dogecoin? So I'm not sure what's going to come of that because Dogecoin isn't a security, but hey. G7 leaders are pledging continued fiscal support for economies. So remember, central banks are doing all they can do. They're now telling governments to spend as much as you can. This is the policy for the time being. The Fed says that this policy is providing powerful support to the US economy. Yes, maybe, but I would argue that it's driving inequality. And the answer to that is going more direct. And going more direct leads to inflation. This stimulus check policy or monetary theory, whatever it is, it's going to lead to inflation. The only question is where. And at the moment, it's gone more into tangible goods like commodities and food, maybe even housing, you can argue, than it previously has, where it just all went into the financial markets because it didn't go to individuals, it just went through the banks. Dr. Copper above $9,000. another sign here. Now, Biden's talking about this minimum wage increase, and it's being ruled out for the Senate. Now, interesting quote here. We don't want small businesses that can't afford to pay $15 an hour, from one of the reps here, Ro Canna. But this is the argument. It's all well and good to sit there in your ivory tower and say you need to pay your employers more. If you're a small business owner and someone tells you you've got to go from $10 or $12 an hour to 15, you don't have a 30% margin on most of your business. And again, this all just results in having to push prices up or fire staff. It doesn't fix things. It doesn't get to the root cause of the problem. So the Fed are already sitting on nearly $8 trillion of assets. I just touched on all of this. Have a look at how quickly it went from 4 trillion to nearly 8 trillion here, a year. Imagine if this is, what am I saying here, 17 trillion within 12 months. Very, very good for our favorite assets if that happens. The treasury market had a cow. Mortgage rates went up. In the US, mortgages are more sensitive to changes in those bond interest rates. Wall Street had a bit of a cry like they always do, and the Fed kind of smiled and soothed them, said everything will be okay, we'll act if we need to. 10-year treasury prices and the returns during these bond bear markets. We've got US share buybacks. Hey, they're back at record high levels, and we're only in Feb. So it's back on, baby. Insiders are selling and they're using company money to buy back. This is the dividend yield versus the 10-year treasury yield, and we've now got the treasuries finally passing the S&P 500 dividend yield. So what does that mean compared to back here, where there was a way better yield on stocks? It means that you can get the same yield or a better yield in a bond. So this is why people would sell off stocks. Why would you take the risk that the stock market can correct 30% when you can own a guaranteed US Treasury bond that's paying you a better yield? So this is why everything is changing. Money is shifting around these global markets at the moment. This is a 16-week cumulative index where we've had a record amount of money globally flow into these equities. $400 billion. A lot of, $500 billion going into stocks in 16 weeks is a lot. Oh, sorry guys, that was Louis' sippy cup. There you go. There's a Nuggets news first. Okay, so US house prices versus wage growth. We've got that big divergence. I'd hate to see what this looks like in Australia. Well, in Australia, we haven't had wage growth for over 10 years now. So in Australia, this red line is flat while house prices have been going up. The Buffett indicator, it shows that we're now severely overvalued for these stocks. Physical gold holdings have fallen away. Now, this is hard to say. I hate saying this, but we're in the business of being right. And this is why I think you've got to put your trader hat on. We do trade the gold and silver ETFs on eToro or on FTX. But the money has started to come out of the gold and silver market because interest rates are rising. And comparatively, gold doesn't have a yield. So remember when we had 19 trillion of negative debt and it was really good for gold? Well, now interest rates are rising. You can get a risk-free rate on a bond. And people are saying, that's better than 0% that my gold has. Now, for the diehard gold investors, they don't care about any of that. But you've got to acknowledge that there's a certain percent of people that are going to make the switch from 0%, which is why they owned gold to protect from negative rates, to being able to get yield again on a savings account or a bond. And so money is coming out of gold for the time being. And we are probably going to see that correction continue until things change. So that's not good news. And that's why you've got to be open-minded and nimble as an investor when things are going to change. Okay, let's flick through all this crypto news. Polkadot has had a huge week. Those parachain auctions where you've got to bid for a slot on Polkadot are starting very soon. So that's going to be like the ICO demand for ETH was almost. Really good news for DOT. CoinShares have released a DeFi index. Brave Browser is building its own decentralized exchange aggregator. So MetaMask is now a DEX, and MetaMask has started to make money. So now Brave wants to do that as well. Aave and Balancer announced a bit of a hybrid liquidity pool lending product. Convergence Protocol raised $2 million. So much money in startups raising at the moment. This is Golem, one of my favorite Web3 D-Web projects. It's now up 230%. So this is a 3-year high. Hey, I didn't even realize this. This is why you have your little gems in your portfolio that haven't rallied yet, and you read about it in the news like this, and you find out, hey, that project I invested in for those fundamentals is now at a record high. DeFi exchange 1inch, that aggregator, they've expanded to Binance Smart Chain because the ETH fees are too high at the moment. Chainlink's got their latest upgrade, so this is a rapid evolution for DeFi, says Sergey. Hopefully I could finally get him on the channel soon, but they're going to be able to use more smart contracts there. NBA Top Shots has had this meteoric rise, but there's been a bit of controversy this week with some people having, weeks and weeks being able to withdraw from the platform. Whether or not that's just a growth issue or there's some sort of insolvency, I'm not sure. Are they faking these volumes and buying off each other? I don't think so, but let's keep an eye on that story. We've got a Banksy NFT or fakes that have sold for over $1 million in ETH. So you just got to be so careful, guys, when there's no real way to verify, for those that don't know what they're looking at just yet, what's real and what's not. A lot of these soccer clubs, football clubs are getting into the NFT space with clothing ranges and online digital avatars. This is going to be an entirely new industry that just explodes in the coming months. Beeple NFT sells for $6.6 million. Too much money in this space. We'll have to get Maddie back on very soon. We've now got musicians that are trying to come to this space with their samples and sell the rights to their songs. $50 million for digital soccer collectibles. I just touched on a similar story there. The ECB wants to be able to veto stablecoins in the EU. Now, this is the same as when China said that they're going to be the only ones that have a yuan stablecoin. Now, you can't stop someone pegging a digital coin to the value of something in the real world, but it's really interesting to watch this power grab come out already. US Central Bank are explaining the preconditions for the digital dollar. They're so far behind China now, it's not funny. We've got this Swiss ETP passing $1 billion in assets under management, so lots of money from that coin, 21 shares product. Cointelegraph launches this Market Pro crypto intelligence platform powered by the TIE. So the TIE are also a partner of ours that we're going to be doing some very cool stuff about crypto data. We're going to be integrating that with our own platform, and long term we want members to be getting push notifications about the latest data. Something's happened. You've got all your custom settings about your portfolio. That coin that you own, there's a large transaction going to the exchange, price might go down. That's my long-term vision for that platform that we're building. And companies like the TIE and Sentiment are going to allow us to do all that, realize that vision. Origin Trail going to mention here from the World Economic Forum. So supply chain logistics, it's always been one of the best use cases. Alameda Research has invested $35 million into Fantom. So Fantom is a really cool blockchain here, and they're looking to support Solana, Serum Radium. These are all these cool little sort of DeFi projects that are clipping together in this non-Ethereum world, which is Binance Smart Chain. It's all just exploded, probably only really in the past couple of weeks, or this year, I guess you could say. All right. Powering through, we're getting there. For a combo is another one that unfortunately had a vulnerability this week, but it was patched and some funds stolen. This is the one that I wanted to mention before. This Canadian Bitcoin ETF is just going gangbusters. I can't believe the volumes it's already doing. We'll get to that in a second. But Ethereum monthly mining revenue reaches all-time high. So this is $1 billion just in February, and it's no wonder that the miners don't want things to change. And this is where I think Ethereum Classic is going to have a lot of life breathed into it at some stage here when that transition on ETH happens. Ethereum trading bot strategy, this extracted $170 million in 30 days. So this is really important, this concept, to understand how these trading bots are front-running information on the blockchain, and this is miner extracted value. I could do a whole episode on this, maybe I will. But basically, miners can see these transactions coming, and if they're about to process a transaction that says someone's going to buy $1 million of RFox on Uniswap, well, guess what? They can go out there and front-run that and buy it. And then the person gets the transaction back and it's completed, and it says, you got this price, there was a bit of slippage, and the bot or the miner who's running the bot, they might have extracted a 1% difference. Now on $1 million, $10,000. So these are the sort of things that are happening that a lot of people just don't realize. So this is why privacy is important. Secret network, for example, or the other layers on top of Ethereum. Privacy is just such an important thing for many, many aspects of any open public blockchain. Square buys 170 million more in their Bitcoin holdings. So Jack Dorsey is he the poor man's Michael Saylor or Elon Musk? I don't think no one's ever used that word, I don't think, recently about him. But how many companies now have just started this movement? And wait till it catches on in other regions of the world where they are super wealthy. That's when Bitcoin's going to go, into the six figures. Coin shares, I mentioned this already. This is the same one. Yes, so lots of money flowing into these funds and these products. Arca is the latest crypto fund to launch its Bitcoin Trust. Remember, this was almost competition for Grayscale because they've been buying so much of Grayscale's fund themselves. Square's Cash App revenues have swollen, nearly 800% last year, mainly from selling Bitcoin, and that's why everyone else is going to jump on this bandwagon. With PayPal, that's why they did it. Crypto leaders back MIT's 4-year initiative to harden Bitcoin's security. So this is just great. The more smart minds and young minds of people coming through their education, learning about Bitcoin and improving Bitcoin, it's going to be awesome to watch how this all plays out. A little collaboration here, ETH with Mina. So this is another two-way bridge. I just feel like there's so many at the moment. So this is, I've got to say this right. This is Pickle Snarks on the Ethereum virtual machine. Now, some of you will know what that means. Others won't. Not really important to understand. Now, this is a great piece by Nick, who's our junior researcher. Optimism. So this is one of the best scaling solutions on Ethereum at the moment. They've done another 25 mil raising. This is going to help roll all this out, pun the pun, their optimistic roll-up technology. This is going to be to the point where all ETH projects that have got their smart contracts are just going to be able to plug into this solution, and ETH fees, I'd say, within a few months are going to be pretty dirt cheap again, and that's going to completely change the game. So for the time being, it paves a huge path and market share for guys like this to capture. I really like this project. So Radium is the next step here, and it allows DeFi on Serum, Solana, all these other blockchains, or many blockchains will be able to do this that aren't like ETH, that don't have high gas fees. And that's because they can draw on liquidity from multiple places as an aggregator because it is so quick. So I'm really excited to see how that all plays out there. Sushi Swap on Solana. So this is a proposal again saying, hey, Sushi Swap, come and join our blockchain. Come and join Solana and Serum. We want you guys to integrate. So DeFi is moving, I wouldn't say away from Ethereum, but it's cheaper, it's better for the time being. All right. Power talking, how we go, we're nearly there. Alameda Research, they've doubled down, another 40 million in Oxygen. So this is maps.me. So they're looking to do like a little DeFi lending app for travelers in the maps.me traveling app. So that's a very cool idea there as well. Kraken says that Ether flash crash down to $700. So that it wasn't a system glitch. That was actually just a whale deciding to dump his life savings. So a once in a year event. Exchange demand, users return Bitcoin. So I'm not sure when you have a flash crash and price goes down and this little exchange says, hey, that's not fair. Your orders got filled at whatever it was. So flash crash from 50 down to 6K. They say, give that Bitcoin back. That's your fault. That's not their fault. Bottle Pay. So this is a little payment startup that lets you send Bitcoin on social media. A lot of people aren't even aware, like, you can already do things like prediction markets and tipping and all that on Twitter with little add-ons, whether it's the Lightning Network or second layers on Ethereum. There's so many little cool apps out there that are going to become more user-friendly in the next weeks and months. I always said that this was nothing to worry about. It was the competitor exchanges and exchanges and competitors that own media companies. So Paolo was meant to come on the channel right at the time this news came out, and he had to cancel. So at least when he comes on very soon, we'll be able to talk about it all out in the open. Mike Novogratz's fund, Galaxy Digital, have led another round of funding for Centrifuge. So this is another company that they're trying to bring those real-world assets onto the blockchain here. So think about not quite security tokens, but the more that we can tokenize and bring into the world of DeFi, the better. Mike's funds now reached $1 billion in under assets in management with a $300 million fourth quarter. Not bad. Here we see Coinbase. This is the mix of retail versus institutional. So back in 2017, vast majority retail. This time around, vast majority institutional. They beat retail to the party. And look, now retail are definitely coming in later. So I think it's just a healthy mix. The whole exchange itself is growing at a record clip, which is fantastic. We've seen a lot of whale transactions. They're doing a lot of OTCs. So a couple of whales withdraw $1 billion. You never know if it's like Elon or Michael Saylor. We know that a lot of the big miners dumped again recently. Maybe it was just filling these orders. All that sort of remains to be seen. Robinhood are adding 6 million users so far in 2021. So, we're talking 1 million people a week going to some of these new apps. There's a huge appetite out there at the moment. Institutions were clearly buying that dip. We see all those statistics and the stuff that we break down, particularly for members. We're doing multiple posts a day now to update you with what is happening on chain. Now, one thing I wanted to mention was this cryptic tweet by Charlie Lee. So Lightbulb, is that a coin or a moon, and then a bank, and then sushi. So a couple of years ago, Litecoin bought a stake in a European bank. It went quiet. They had a falling out, I think, with the co-owner. Now, I'm not sure. I think Litecoin bought him out as well. So Litecoin could be looking to use that bank and use Litecoin, the Lightning Network, Ethereum, DeFi, sushi, and these lending protocols. Integrate that into the bank. And that's why I've said it's a race from, exchanges versus banks to kind of meet in the middle and serve everyone. Another Coinbase story. Sorry, I should put this back here. Coinbase's financials are now public if you want to check them out ahead of that stock market listing where it's been valued at $100 billion. Now, gold has finally reached 10% of gold's market cap. Insane to think that we got there. As I said at the start of the episode, the room for growth, $10 trillion goes from the bond market. Yes, gold can double, but Bitcoin can 10x, and that takes us to, $500,000 a coin. And if we get there, we're probably going to overshoot to $1 million. Now, that's super long term as well. The Canadian Bitcoin ETF, $400 million in 2 days. We're going to have $1 billion going into the US ETF when it gets approved on day one. So let's have a look at these charts. Weekly chart. Let's just clean up a lot of this mess. The weekly chart is starting to look... I'm going to turn off these indicators for you as well. Get rid of these colors. There we go. So we've got a big inside bar. This week I tweeted and I joked about 2017. A lot of people didn't like that joke or get it or appreciate it. But my point I was trying to make is that this inside bar here looked pretty scary at the time. Very, very similar. It's engulfing, and here we are where it looks pretty scary, but this can all just be a little flash in the pan as we head towards 100K in the coming years. So don't let it scare you. I actually think we're probably due for a bounce, if not some relief rally. And as of today, we've started off that new week, and it's all looking like a pretty promising start, as tends to happen when we get to these oversold conditions and we get the divergence. Trading can be easy if you let it be, if you understand the very, very basics. And the two trading strategies I use and teach the most in our group in the trading education, learn those two alone and learn about triangles, flags, pennants, wedges. That alone will help you make money in a bull market. ETH, again, it's held these critical levels. I think it's all starting to look very positive again. We lost this wedge, and that was looking pretty bad for a time, but we've recovered it. So boy, oh boy, markets have been volatile. They've thrown us around back and forward, failed breakout attempts, reclaims, but now I think we've finally broken out, retested, we're pushing off. And if that's the case, we can have another leg higher in these alts. So some of you will be very, very happy with taking profits and maybe getting to pick up some more of your favorite. We were down 40% or more on a lot of these alts at a stage there. Elrond, enjoyed that interview the other day, 70%. So we've had a good correction. We've had a flush out, a washout of funding, a washout of speculation, a big turning over of coins and coins in profit. So I think there's a very healthy mix. It's still all bullish on chain. That's it for tonight, guys. I'm away for the week, enjoying a week, enjoying my best mate's wedding. I might see if I can record the best man speech and upload it to YouTube. Other than that, take care, smash that like button, head over to nuggetsnews.com.au, check out Collective Shift, support the platform, join the community, join our family, and I'll talk to you again soon.